Hello. Well, you always hear that you should invest for the long term. But the questions that might pop into your head are, first, does it actually work? And second, how do you invest for the long term? Well, to find out the answers, let's turn to the SGX My Gateway page and this particular chart, which shows you the performance of the Straits Times Index over the last 5 years. And what's noteworthy about it is that very strong run that we had, because remember, 5 years ago, that's the time that the global financial crisis started and Lehman Brothers collapsed and so on. So over this time, over the last 5 years, from October 2008, the Straits Times Index has actually gained almost 55%, or around 9% per year. But obviously you have to bear in mind that that's not 9% consistently every year. This is an average. And which 5 years you look back on really does make a difference as to how the market has performed. And you can see that when we go to this next chart. This is the 10-year chart. And you can see there the big run-up post-SARS and the Iraq War, and then obviously the collapse that came with the global financial crisis. And over this time period, these 10 years, the average annual return of the Straits Times Index was only 6%. So there you have it. It does really make a difference as to which time period you look at, and obviously also which securities you look at. Because even though the Straits Times Index has gained over that time, that can't be said for all the stocks that make up the Straits Times Index. By the way, out of the 30 stocks in the STI, 27 of them were in the index 5 years ago. So have a look at Singapore Airlines, for example. Over the last 5 years, it has actually gone slightly backwards, notwithstanding the peaks and troughs in the meantime. And Genting Singapore has increased its share price by a multiple. And you can see again that that wouldn't have necessarily been consistently the case. There would have been losing periods in those 5 years as there were gaining periods. So the bottom line is you should really do your homework as to what you buy and how long you do want to hold on for. In fact, there are 3 important lessons that anyone who invests need to know. First of all, what are you investing for? Second, what is your time horizon? Until when do you need the money? And third, what is your risk profile? What can you sleep with at night and still be comfortable with your investments? You might like to turn to this book for some guidance. The 3 Dimensions to Successful Investing is a book published by the Securities Investors Association. And you can either get that or sign up at SIAS for the newsletter to find out more information, such as the information I've just presented to you. None of what I've said should obviously be construed as investment advice, and you should always seek the guidance of a licensed professional to help you with your own individual circumstances.